For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
G'day, trader. Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing a powerful, high probability, simple strategy based on information that every single trader has on any market. The most important thing, though, that a trader must refine and work on a continuous basis is their daily process for hunting the best playbook trade setups. So not looking for taking trades, but hunting rinse and repeat money-making trading setups. Any instrument, any market, any session. Now, what's an easy money-making trading setup? Now, we've gone over this in the almost every video, but we talk about levels, going from level to level. That's where we're going to be targeting asymmetrical risk reward. Now, one of the things that traders struggle with often is they think that everything's about counter trending, just constantly counter trending, whereas we can be in line with a higher time frame trend. We're going to be talking about that. We're going to be talking about going through your watch list, but recognizing where it's easy to make a lot of money. Zero stress, zero thinking, zero emotion, and zero management. Contrasting that with a science project, which, yes, you can trade it, but is that the same type of asymmetrical risk reward opportunity? We're looking for the same setups over and over again. Not trying to trade a market because we can. We're looking for the same setup where it's easy to make a lot of money in either direction, whether we're going long or whether we're going short. The opportunities for explosive parabolic trades, not trying to catch the high or catch the low. Which instrument shows up on our watch list based on certain criteria that has a high probability of setting up in our timing window, regardless of the session that we're trading, for an explosive, parabolic, easy money-making trading setup. So the first thing a trader needs to decide is which setup are they hunting. Now, the long setups or the short setups are exactly the same, so the instruments are relevant. Now, if you're hunting one of those setups, the key thing then to understand is which instrument is setting up, whether we're trading with a higher time frame trend or we're looking at a reversal opportunity in a market that could be trending already, but we've got a counter trend day that's giving us a signal, or a market that is in a trading range but still offering us a reversal opportunity, closing at an extreme, trapping traders on the wrong side of a market. So we talk about signal days in the playbook. Signal days are designed to bring an instrument to our attention as they may potentially be setting up. Whether we have breakout traders in the market, whether we have a first red day signal in a market that is broken down or about to break down, or a first green day signal in a market that is trending in the long direction or about to continue a trend in a strongly trending market. And the inside day, which is a narrow range day, which can represent a coil for an explosive move, whether that's a reversal or a trend trade continuation opportunity. And then, of course, low-hanging fruit. If the market has already moved in an earlier session, the low-hanging fruit is about the opportunity continuing in the next session, whether that move has happened in London or it's happened in Asia. London may get the low-hanging fruit, or New York may get the low-hanging fruit in a market that has had an explosive move in an earlier session. First bounce, first bar is after a major red news catalyst in line with the higher time frame. Now what that is we could have major impact, high impact major red news, non-farm payrolls, CPI, FOMC, presidential tariff announcements, whatever that may be. But after the explosive move in line with the higher time frame, we have an opportunity to position ourselves, still manage our risk, and extract profits in a news momentum catalyst opportunity that is in line with the higher time frame. Now, I talk about following a basket. Now, that's entirely up to traders what they do. You can have a couple of indexes, some currencies, metals, energies, But I'll show you a simple way that I do. I look at one screen representing the basket of metals, for example, or the basket of currencies, and I'm only looking for one or two signals from those instruments. Same thing with currencies. And so if I have my major pairs, for example, I can bring up all my major pairs at once and look to see if any of those major pairs have given me a signal day or multiple signal days, and then whether or not, when I come to the screen in my session, which instrument has already left the station or which one is potentially now setting up into my New York window. Now, if one of the major pairs gives me a signal day, I can also go to that pair's cross rate pairs to see if any of those instruments are setting up for my session, whether that's Asia, London, or New York. Now, we had multiple inside days on Tuesday, and any of those instruments, if you were trading London or Asia, potentially may have offered opportunities to traders in those sessions. For example, we had an inside day on the Aussie dollar. Day 1, day 2, Wednesday's day 3. There are two types of trade opportunities that we can look for on a day 3. Trend trades or reversal trades. The Aussie dollar gave us a signal day, and for traders who are trading the Asian session, the Aussie dollar obviously could be a major pair that they're following, or traders in the southern hemisphere. How did price set up on the day? We have a beautiful pin hammer after breaking out from our levels to the low of week level, positioning ourselves in the market, entry, stop loss, and a take profit level. Now, this is a session trade opportunity. We can use a range expansion 200% as a potential profit target of our high-low of our initial box formed in the Asian window. Now, this is an example of a reversal setup based on Monday, Tuesday, Wednesday template, predefining our risk, taking a position, entry, stop loss, and a take profit level. The question asked is, which setup are you hunting in the session that you're trading? Now, this is an example of a reversal trade setup in the Asian window for the Aussie dollar, based on a signal day, inside day, low of the week, entry, stop loss, take profit. Now, another pair that came up on this as a signal day was the pound Australian. So traders in the London session may have had the pound Australian on their list. We're just looking at a basket. We can flip through any pair. We can bring up our pound cross pairs. We can go and look at any instrument, but an easy, quick way to look through our instruments is just to have the basket paired together and then identifying pairs that have a signal day. So again, just looking at our pound Australian, it comes up, it has an inside day. We're trading the London window. We can take a look at that pair and how it sets up into our session. It goes on our watch list. It's given us a signal day. How does it set up into our timing window in our London session? We have a market that breaks out, triggers new breakouts, pumps back up, coils into our Europe open window for a reversal trade setup opportunity in our Europe session. Simple process applies again, entry, stop loss, and a take profit level, a 100% expansion of our consolidation. The key thing is to keep things simple. We had a signal day. We're trading an instrument that can potentially move in that session, a pound cross pair based on signal days. And then how does price behave into our timing window? Rinse and repeat, scale it up in size. Keep it simple, scalable, and repeatable. Now, if you take a look at this pattern right at the high of day level, we have a market that's broken higher. We'll just highlight this for traders because I want to show you this. Broken higher, pumped back up, coiled sideways into the peak formation before reversing. Now, let's take a look at yesterday's Dow Jones Industrial. Yesterday at the New York Open, we have the same behavior. Different instruments, same behavior. We have a market that breaks out, dumps down into the open of the New York session before pumping up, coiling sideways into our 10 a.m. hour and reversing back down through towards the low of the day. Same pattern, same behavior, levels to level. Same setup, same behavior, level to level. Just going back and looking at our pound Australian again. Peak formation, a pump, coil, and dump into our Europe open window. Same behavior, subtle variations, same setup, reversal trade setup opportunity in the London window. As we talked about on the post yesterday, we already have a market that's a first red day template inside month in February, the first red month, breaking down from a first red day signal, continuing to break down, lower lows, lower highs, blowing off vertically on the new month, April. Now, all this is a sell high signal in a broken down market. So this is where traders can get confused because they think it's always about counter trending something up high or buying something because it's down low. We're just aligning ourselves with the higher time frame. Now, signal days can alert us to potential high probability 90-10 trade setup opportunities. Which instruments set up in your session? So build your watch list, signal days or markets that are offering signals based on the setup that you're hunting, timings, levels, and behavior of price, entry, stop loss, take profit level. There are only two types of trades, buying or selling. The process is the same regardless, no matter what market, what setup, entry, stop loss, and take profit levels. There are only two setups on the day, dump, coil, and pump, or pump, coil, and dump. Once you understand exactly what setup you're hunting and how that setup can present as a signal on the day and how it sets up into your session, you understand what Richard Dennis means by you can trade any market because they all have those two levels. And if you understand the higher time frame, it's a matter of bringing the best instruments up on your watch list each day and sticking to a simple rinse and repeat process. And then if the market sets up in your timing window, into your session, entry, stop loss, and a take profit level. Keeping it simple, repeatable, and scalable. Have a great day, traders, and may the markets go with you.